Okay, I think we are live. I'm starting a bit later than I'd hoped because I had some technical issues. But anyways, welcome back to my channel. Welcome back to Fat Free Economics. My channel is about unwinding the clickbait headlines in the economic news. And as an economist, I want to help you find clarity and understand better what's happening with the economy. And so I stream Wednesday night and Sunday afternoons, Pacific Standard Time. And if you like this content, feel free to subscribe. There are times when there's a lot of news in the media about the economy, and I feel like there's a need for me to have additional streaming nights, and this is one of those times. The debate about the labor shortage is still raging on in economist circles and as well as in the mass media. So I wanted to give an update on some of the latest data where we're starting to see more of the shape of what's happening with the labor dynamic. So, with that said, let's jump right into it. And I'm going to start with a video where the, CNBC is interviewing a restaurant owner who was looking for applicants, and he uh, raised his wages to $15 an hour. And let's hear what he has to say. And then we're going to put those comments because he's only one person, he's only one business. We're going to put those comments in the proper context with regards to what's happening with the overall, uh, labor market and the economy in general. So first, let's take a quick look at how the interview went. Okay. Okay. So that was the what happened with one restaurant owner who raised wages, and evidently she had quite a bit of applicants. But I think we all understand that raising, it's like he said, raising wages is part of the solution, but there is so much more going on in the economy um, than simply increasing salaries, and so we need to take those comments in a broader context. I do think that excuse me. Um, I do think that increasing earnings is part of the solution, but unless we have a broader understanding of what's going on, then we're really not going to understand the multi-factor solutions that we need to ease the labor shortage. So, with that said, let's put the current labor shortage in a broader context. So, um, let's see. Okay, so right now, what we have is there is a paradox in the labor market where we know that 9 million people are unemployed, right? They are wanting to find jobs, need to find jobs, but there's something preventing them from actually making that connection. And so, um, how do we resolve this paradox? So, let's take a look at an article from CNN Business, where it really kind of lays out the the challenge in the economy right now. And look at this headline: millions of jobs and a shortage of applicants. Welcome to the new economy. Right at this time, I think we all kind of understand that um, this is what's happening in the economy. It's not that workers are lazy. It's not that businesses are intentionally trying to undercut salaries for workers and not pay them enough to live. I mean, there's a lot of frustration on both sides, and unless we understand the factors that are involved in this, I think we're not going to see a way out of this. So, um, this article I thought was very insightful because it goes on to the fact to state that around the world, airlines, restaurants, and hotels can't fill open jobs, stymieing efforts to capitalize on resurgent consumer demand. Many workers that went home when the pandemic hit haven't returned to shipyards, factories, or construction sites, hitting production and stalling projects. Even Michelin-starred eateries and Wall Street banks say they can't hire enough people to meet their needs. Now, that kind of frustration is probably familiar to you if you are a small business owner, or if you're a business out there trying to hire and find the right workers. And this situation might be equally frustrating for you as someone out there who are looking for a job but have some concerns about the workplace and feel some restraining factors from childcare and safety concerns about COVID. So I talked about some of these factors in the previous um, discussion that we had about the labor shortage. That there's more to it than simply the fact that salaries are not high enough. That's certainly a factor. But let's take a look at what the article says. Um, so, um, sorry, here we go. The economy emerging from the crisis also looks different from the one that preceded it. Demand is higher in some sectors and lower in others. Workers have left frontline jobs in some industries for roles that are less exposed to the coronavirus, won't be affected by fresh lockdowns, or offer better work-life balance. And it's kind of an eye-opening figure, but in the United States, a record 4 million people quit their jobs in April, including 649,000 retail workers, right? And in addition, there was a survey of more than 16,200 employees globally, where half of them said that they would ditch their jobs after the pandemic if they weren't offered enough flexibility on where and when they work, right? And this statement from uh, Erica Groshen, she's the U.S. Bureau of Labor Statistics. This is a time of flux. It's not so much that it's an overall labor shortage as a time of structural changes for the economy. And I think that, this comment is very, very illuminating, because in the previous talk, we talked about how for an economist, a shortage in a free market is a temporary thing, right? Supply and demand is regulated by price signals. And so we saw in the previous video clip where the restaurant owner said, I'm going to raise prices. In other words, he's sending out a different price signal. And suddenly he had a number of, I don't know about flooded, because there's always a lot of hyperbole in these videos, but I was only he had a substantial increase in applicants for the job. So whenever we talk about as economists about a labor shortage, excuse me, um, we understand that as long as the free market is operating, a shortage is in fact a temporary situation. And by the way, I apologize if there's some background noise. There seems to be some airplanes flying around, but yeah, so sorry about that. But the main point of what she's talking about is that um, there is a temporary imbalance between labor and supply in terms of the wages that are being set, right? So that is a pricing signal issue. But she's also pointing out to the fact that with the pandemic, there is a structural problem in the economy, right? People and workers are seriously reevaluating their choices for careers and where they actually want to work. And so the article offers a little bit more insight into what's happening. Um, so you can see, um, you know, that they're talking about um, a thing that they're calling a location mismatch, right? So to quote, the pandemic triggered a mass movement of people who left cities as jobs were cut and the perks of urban living evaporated. Not everyone has returned. Many students who would typically be hired for hospitality jobs in cities like New York, oh, excuse me, let me bring that up so you can actually uh, see that. Um, Many students who would typically be hired for hospitality jobs in cities like New York or London are still living at home, while others are weighing permanently moving weighing permanently moving outside urban centers. Bad sentence structure there, but anyways, I think they mean that many people are considering moving outside of the major urban centers and finding a living there. So I recently had a conversation with a realtor where she's experiencing a lot of demand in the Los Angeles market. And what she was telling me is that because the lockdown has eased, a lot of people who are working in the restaurant industry and other retail jobs are actually coming back and looking for places to live because the lockdown has lifted. So that is an anecdotal story, but it certainly confirms what we're reading here now, which is that the pandemic forced a lot of people to move back with their parents, relocate, in an effort to find some kind of living. And of course, it was a temporary situation. The pandemic has eased, and now it is the time to reassess not only what kind of work that they do, what kind of jobs that they want to um, perform, not only the type of employers that are good for their life situation, but they're also, in fact, talking about a relocation. Where do they live, right? So clearly, that would complement the job search. And I'm not saying that everyone out there is facing this type of question, but clearly, a lot of people were forced to relocate because of the pandemic, because of the lockdown. And I'm sure a lot of the people out there who are listening to this are nodding their heads and saying, "Yeah, that was me. That I had to find some place to stay, some place um, to wait out the lockdown." And this is resonating with me. Um, with that in mind, um, you know, um, with that in mind, the article is pointing to really two major issues. Like I said, one is a pricing mismatch between labor and supply in the labor market, and it's a structural problem, right? And if you take a look at a chart like this, okay, this is job openings that are rising in the U.S. and UK economies as the economies bounce back, and this goes from February 20 to April, and you see the big major drop here in terms of the job losses, and now the job openings are starting to ramp back up again, right? And some of the people, I think many companies had the thought that they would simply, open their doors again and make phone calls or post job listings and thinking, okay, a lot of these people have been out of work. They're probably eager to come back and get back into the job and start earning a living. But of course, they've been surprised because it hasn't quite worked out that way. It really hasn't been that easy, beyond the immediate concern about COVID and health protocols. And, you know, um, in my previous discussion on the labor shortage, I also pointed out what's been happening with uh, uh, the trend in real wages for people with more limited forms of education. Right? They have been under pressure for decades and continuously getting, excuse me, jobs that pay them less and less. And the pandemic has really pushed them to the edge and saying, okay, um, I love the job that I do. I love working in restaurants, but this has really pushed me to the edge because I've been without income for 14 months and I need to rethink my life plan, right? And so it goes beyond a simple pricing mismatch. You know, that interview was correct, I believe. You need to raise wage. To quote the article, the pandemic has triggered bigger shifts in the labor market, excuse me, as people reconsider what type of jobs they want to hold and on what terms. Oh boy, there's a lot. Sorry about that. There's a lot of background noise out there. Somebody's gunning their motorcycle. That's triggered a reallocation of workers across industries that could have long-term consequences, right? So when we talk about, solving the labor market, it's no longer going to be a discussion about will people come back to work because we opened our doors and we're willing to pay. You know, um, people are making that risk and reward calculation that I talked about before, and the risk aspect has gone up, and the pandemic has opened their eyes as to the trajectory of their career, has really forced them to confront the long-term trends in their wage growth. And I think there's a lot of reassessments going on. You know, um, so we're really talking about the great relocation, right? Um, People have been forced to move around, and let's take a further look at this article. You know, um, so um, um, so yeah, we talked, about the downward trend in real wages for people of more limited educational attainment. And if you look at this quote, that's really expressing the same point here by this economist at Capital Economics. If these labor shortages persist for a long time or become widespread across the economy, you would expect wage growth to pick up, which would prompt inflation to pick up, right? From Paul Dale's. Um, and so it's like I was saying before, right? With this reassessment, people are saying are actually with the increased risk of maybe further lockdowns, with the potential for um, you know uh, additional safety protocols and having arguments with customers about masks and whatnot. They are looking at their wage growth and saying, is this the industry for me? Right? Now, you can see how this relates to the discussions um, about um, about inflation, because if wage growth goes up, the labor costs will go up and inflation will go up, right? Now, this is, wages going up for many of these people who are working in low paid jobs is probably a good thing, but the overall impact on the economy will also have that consequence that it will additionally put pressure on inflation. But before we get too worried about it, um, that chart on real wage growth showed that for decades now, people with no high school degree, only some college, have been on a downward trend in terms of the money that they earn for a long time now, and that kind of trend really isn't going to go away anytime soon. You know, so let me uh, take a look at this quote here. The latest big picture data on pay growth looks generally subdued, according to a capital economics analysis of the 19 countries that use the euro, the United Kingdom, and the United States. but Goldman Sachs predicts pressure will increase slightly in the near term, right? So what we're really saying in this particular quote is that the long-term trend of wages being flat and stagnating is likely not about to go away. There are macroeconomic factors in the world that make that unlikely. But in the short term, while we're coming out of this pandemic, while people are making an assessment about exactly, um, what kind of work that they want to do, where they want to do it, there is going to be a near-term increase in wages, and I think that has been a shock, to a lot of businesses out there. Like I said, I think they were expecting that they would open their doors and make some phone calls, and the workers would return. Which on the surface, it probably was a reasonable assumption. I'm not making, uh, I'm not diminishing the difficulties that that businesses are facing out there. It's very serious concern for them as well, right? Now, so what do we have here? So first, we watched the video about the restaurant owner increasing wages and having more applicants apply. We have kind of set the table in terms of what's happening with the economy, right? Not only a pricing mismatch in the labor market between supply and demand, where some businesses are having to increase their wages, but now we see that there are structural problems, right? And I kind of hinted about at that when I showed the chart with the long-term wage growth for lower education workers, lower information workers, right? And that kind of sets the table for what we want to talk about now, which is the latest job estimate from economists, right? So we know that pricing signals are effective in some circumstances. We know that structural challenges remain. So what happened to the economy? Let me take a look. What happened to the economy in June? Now, this is not the official job report from the government, but this is an estimate of private uh, sector job growth from ADP Employment, right? So if you're not familiar with them, they do a lot of payroll processing for private sector employers, private sector companies, and so they have data that gives them some insight about about how many jobs were created in a particular month, and their estimate is saying 692,000 jobs created in June, which did exceed Wall Street estimates. So in the previous interview, the restaurant owner did talk about difficulties initially in getting workers for his business, and we've been hearing a lot of talk in the news about retail workers, restaurant workers not willing to work. That businesses are having a hard time filling their ranks. But here's the thing: when you look at the actual numbers, of course, this is an estimate, but the previous job report from the government actually confirmed this general trend. When you look at the actual numbers, and let's take another look right here. While employers complain that they can't find enough workers, the battered leisure and hospitality industry still registered by far the most job growth at 332,000 new positions, accounting for nearly half of June's overall job gains. So what happened? Okay. Now, the Economist for ADP, that's the payroll company that I mentioned, is saying that it's all down to a timing mismatch. Everyone is hiring at once to fill positions for the summer, And he's saying the demand for hospitality workers is still surging, but on the supply side, you're seeing frictions like childcare and health risks, right? Um, so overall, the job creation estimate is 692,000 in June. 332,000 new positions are in the leisure and hospitality industry. And in fact, the gains, the job gains were evenly spread across small, medium, and large businesses, but higher remains a challenge across the board, right? And as I mentioned before, right, this is not the official government report that's going to come out on Friday, um, which is tomorrow. And economists are expecting about 700,000 jobs were added in June. So we should note that, making predictions about job growth during this pandemic recovery is a very, very difficult thing, right? There's a lot of disruptions, there's a lot of structural challenges that we already talked about. So, with that said, what the actual data is showing is that despite a lot of emotions out there, okay, sorry, I keep forgetting to update the banner here. Despite a lot of emotions that are out there, the actual data is showing that the job growth, even for the hospitality industry, for restaurants and retail jobs, in fact, especially for them, are actually doing a lot of hiring, right? It may be like the gentleman at the interview that they needed to increase wages, but the hiring is actually going on, um, and it's in fact is the biggest component of job growth, right? So there's a difference between the economics, the economic data, and the feeling that's out there. And of course, there are still many, many structural challenges to hiring. We shouldn't ignore that, but I think these numbers should be reassuring to a lot of people out there, both people looking for a job and also employers who are looking to fill their ranks in the sense that hiring, in fact, is happening. The recovery is happening, right? Um, but it's simply that demand for their particular sector, for their particular industry and business, demand may still be outpacing their ability to hire and fulfill orders. So the frustration is there, but the data shows that, yeah, it's starting to, the labor shortage is starting to ease. And that goes back to what I said as an economist said, when there's a mismatch between supply and demand, pricing signals will adjust. As that gentleman was saying, I raised my wages, right? And so the situation is starting to resolve itself. The market is starting to resolve this situation. Now, we still need to deal with the structural issues that are there in the economy, right? Adjustment of pricing signal, as in this case, raising wages, will not make all the problems go away, and that's kind of exemplified by the next article that we want to look at, and it's pretty eye-opening as well, right? Because what people are calling the Great Resignation, according to Monster.com, 95% of workers are considering changing jobs. 95%. 95%. Remember, we're talking about the general overall reassessment that people are doing in terms of looking at their jobs, looking at 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 the work they're doing, and saying, "Is this really for me?" They're looking at the wages that they're earning. Is this really enough for the risk that I'm taking in terms of safety protocols and stuff? And now we need to consider the issue with the great relocation, where a lot of people have moved away from the urban center and now feel like, with the lockdown that is easing, um, people are, people are wanting to move back to the urban centers, but they're not sure, right? So a lot of eye-opening data here. Um, yeah, this is really just repeating the 95% workers are reconsidering the job, and 92% are even willing to switch industries to find the right position. Now that is very, very significant. I mean, how many times does a person change the type of profession that they perform? On average, it's about 4 or 5 times in a lifetime, based on the last study that I've seen. So this is certainly still causing a great reassessment of work, and I think it shouldn't simply be called the great location or the great resignation. I think the real truth is it is the great reassessment that has been brought on by the pandemic. You know, so yeah, so in order to solve some of these structural problems about location issues, about safety concerns, a lot of companies may need to reconsider the benefits that they offer in terms of flex hours and telework, right? Because it's not enough, as we said, to simply adjust the price signals. The structural problems need to be dealt with, right? So if you're a business out there and you're looking to hire workers and you're saying, I put out a job posting and I increased the hourly rate by $2 to $3, that may not be enough. You need to be aware of the reassessments and the risk reward calculations that are taking place outside with many people, and saying, do I really want to move for this job? Do I even want to switch industry? Is this profession the right profession for me? So I think the market is starting to resolve this issue, because, as we said, right, the job gains estimate, and we'll know the final numbers or the initial numbers from the government by tomorrow. But the estimate of job gain is 692,000 in June, and ADP is seeing not only you know uh, a lot of job growth in the hospitality and leisure industry, but the gains were evenly spread across small, medium, and large businesses. So the um, the overall gist of this is that um, there are two components to the labor shortage: the pricing signal in terms of wages and the structural problem. And we see that right now the market is starting to address these concerns. Right, the pricing signals can be more readily resolved, but in terms of the structural things, in terms of offering additional telework benefits and dealing with concerns about COVID, I think that's going to take a longer time. But the good news is the market, as it should, is responding to these dynamics in the labor force, and is uh, starting to match supply and demand, and that's exactly what we would expect. So the labor shortage is real. It's definitely ongoing, right? But I think we can expect some improvements in the near term. So that's my thoughts, and that's my update on the labor market for now. We'll keep an eye on things. We'll look at the job report tomorrow, and I'll do a follow up, on this topic. I think the labor shortage issue is going to be with us for some number of months. So I'll continue to talk about it, tease out the data, and help you to find greater clarity in terms of the overall picture. Now, in terms of the streaming for tomorrow and my schedule. Um, so tomorrow, I'm going to talk about the Facebook monopoly case. Department of Justice is bringing a lawsuit and saying that Facebook is a monopoly. I have some thoughts to share with you on this, on whether are they a monopoly, are they not a monopoly. I think my remarks might be surprising, in the sense that maybe the monopoly question really isn't the question to ask, right? And then on Saturday, I'm going to be talking about the future of work, right? Because there's a story about how Amazon is using algorithms to manage their delivery drivers, and people are starting to talk about whether, are we all going to be working for robots and algorithms in the near future? So I'll share my thoughts with you about that. And then on Sunday, I'm going to talk about the housing market. There are some indications that the housing market is starting to cool, but that's early data, so there's some conflicting data there, and so it's difficult to understand what exactly is happening and what we can expect in the near future. So we'll tease out the data there and have a discussion about that. So anyways, I hope you found that helpful, and I'll see you in the next live stream.